trading in the shitcoin space is no different than gambling. Okay, so they're gambling, and people love to gamble. And the people who promote those shitcoins know that people love to gamble. There's a place for that called Las Vegas.
Keiser kicks off his discourse by highlighting Bitcoin's remarkable ascent against fiat currencies. He emphasizes that while traditional currencies may falter, Bitcoin continues to soar, steadily increasing its purchasing power. Keiser attributes this to Bitcoin's fundamental nature as a medium of exchange, a concept envisioned by its mysterious creator, Satoshi Nakamoto. He asserts that for individuals seeking to safeguard and even enhance their purchasing power in the face of economic uncertainty, Bitcoin stands as the ultimate solution, outstripping even gold in its potential. Central to Keiser's argument is Bitcoin's decentralized nature, which he vehemently defends against criticisms stemming from the rise of Bitcoin exchange-traded funds ETFs. He clarifies that while ETFs may provide easier access to Bitcoin for mainstream investors, they do not compromise the decentralized essence of the cryptocurrency. Keiser elucidates on Bitcoin's consensus mechanism, rooted in proof of work, which ensures that no single entity can manipulate the protocol, regardless of their holdings. Moreover, he highlights grassroots initiatives like Node Nation, fostering decentralization at the individual level and challenging centralized power structures.
Against all these other currencies, Bitcoin is already screaming to new highs. Against all fiat money, the use case for Bitcoin is, and I mean, this could get into the broader argument of getting back to the history of Bitcoin, and this is the epoch, because remember during the earlier epochs, there was this idea that Bitcoin needed to handle more transactions, it needed to be faster, it's a medium of exchange, and this is what Satoshi wanted. And then that's an interesting sidebar that I have a lot to say about as well. But so against all these fiat money, it's already increasing its purchasing power against all this fiat money quite aggressively. And so anybody who would want to protect their purchasing power of having an asset that is going to allow them to go into the future with their purchasing power intact and even enhanced, there's no better answer than Bitcoin. Nothing comes close to Bitcoin to maintaining purchasing power and increasing purchasing power into the future. Nothing comes close. I mean, gold is kind of the nearest cousin to Bitcoin in the physical world, and it will continue to outperform gold very dramatically. It's outperforming property. I think part of the reason the property market is collapsing is because people are moving money into Bitcoin. The ETF market and the attraction of Wall Street obviously is adding another huge pool of capital into Bitcoin. It is decentralized. People say, well, the ETFs make Bitcoin less decentralized. That's completely false. We can get into that, but that has nothing to do with the centralization or decentralization of Bitcoin, because the decentralization aspect of the protocol speaks to the consensus, the underlying consensus mechanism that's proof of work and not proof of stake. So it doesn't matter if Larry Fink has 300,000 Bitcoin. He cannot change the protocol. He has no influence over the protocol, no more influence over the protocol than if this person with 5 Satoshis. So there's an incredible democratic appeal right there. It's a meritocratic appeal. So and the decentralization of Bitcoin keeps getting more decentralized because you get more nodes. Here in this country, there's a project called Node Nation. So all high school students in the country are being taught to run their own node. And that answers the question of, well, what happens after Bukele? Well, the country's being schooled in decentralization, and that the political power resides with the individual, not with the centralized state. So at post-Bukele, you're going to have a population that will demand to continue to have this decentralized government working for them. They know the power of decentralized government because they went from being the most violent country in the world to being the least violent country in the Western Hemisphere and getting all these incredible benefits from having Bitcoin as legal tender. So, and we know from the consensus mechanism of Bitcoin that once incentives are aligned, a phrase you used already, which is a very key phrase, is a very important phrase. Once that is inculcated in the brains of the population, that is a change in the brain and the mindset. You cannot, once you can't go from a pickle back to a cucumber, right? I mean, it's happened. You are now of a higher state of consciousness, and that's the future. So Bukele is setting the stage for many decades of a population that is exercising their individual sovereignty with their own Bitcoin node, and so the decentralization is only becoming more decentralization. It hews toward greater decentralization, and everything else is going toward greater centralization. Yeah, and I mean, I will say this about the ETFs. It is an attempting honeypot. If the state wanted to confiscate Bitcoin, they would go after Coinbase, that's the custodian for all these ETFs, and they would potentially commandeer or seize Bitcoin, as they've done in the past with gold. I mean, I think that's a legitimate risk. I think people who are not self-custodying their Bitcoin are taking an unnecessary risk with their Bitcoin. But nevertheless, I would say that's a risk. But in terms of the overall decentralization of the protocol, it has no impact because it's proof of work, not proof of stake. Proof of stake, like Ethereum now, is proof of stake. It's not even proof of work, or tries to be proof of work, right? It's not even pretending to be a Bitcoin competitor. It's just a fiat version. It's just software that for some reason has a coin attached to it, but there's no reason for there to be a coin attached to it. You don't need a coin to do what Ethereum claims to do. The same thing with Cardano or any of these other projects. The coin is superfluous. It means nothing to the claims of what they believe the software can do. And the barriers to entry to do that, make that software, are almost zero. That's why there's 2 million or 3 million, 12 million, 100 million versions trying to compete in the exact same thing. To do the same useless, the same useless programs, but faster. That's their claim. Like Cardano will say, we are just as useless as Ethereum, but we're faster. I'm like, okay, Charles. Yeah. Okay, Charles, great. So you're faster at being useless. That's a really great business proposition. Where do I sign up? It's like, it's so stupid.
Bitcoin and sociopolitical transformation. Keiser extrapolates the societal impact of Bitcoin, particularly in regions like El Salvador, where it has been adopted as legal tender. He contends that Bitcoin's decentralization empowers individuals, shifting the balance of power away from centralized authorities. Drawing parallels with historical transformations, Keiser envisions a future where populations demand decentralized governance, inspired by the benefits afforded by Bitcoin. He predicts a paradigm shift in consciousness, driven by Bitcoin's alignment of incentives and the democratization of financial systems. Addressing concerns surrounding Bitcoin ETFs, Keiser acknowledges their potential as honeypots for regulatory intervention. However, he emphasizes their role in spotlighting Bitcoin's ability to demonetize traditional assets like gold. Keiser cites the influx of capital from gold ETFs into Bitcoin as evidence of the cryptocurrency's growing dominance in the financial landscape. He argues that this trend not only validates Bitcoin's value proposition, but also strengthens investor confidence in its long-term viability.
If you think you're buying Bitcoin when you buy an ETF, you are not. When you think you're having Bitcoin on an exchange, it's risky. There's only one way forward, and that would be self-custody, right? And but nevertheless, the ability for ETFs to shine a spotlight on the ability of Bitcoin to demonetize fiat money and demonetize gold. Like a lot of the gold ETF money is flowing out of gold into Bitcoin. Now, before the Bitcoin ETF, I could say that on Twitter and say, I think that Bitcoin's going to demonetize gold. And it would be like, that's an interesting idea, but maybe not. But now I can say, look, people are selling the gold ETF and buying Bitcoin ETF. So that's proof that Bitcoin is demonetizing gold. Look at that. The numbers are there if you want to look at it. And I think so that's useful. And it also increases people's confidence and conviction because they can see the numbers. They see, wow, maybe gold is inferior. Like Max has been right and these other people have been right and Peter Schiff has been wrong. So it's helpful in that sense. And every facet of society will be touched by Bitcoin in one way or another. Wall Street, when Bitcoin arrives, it's still Wall Street. So they have a Wall Street reaction, like let's create an ETF. In the minds of like Luke Dasher, who's here as a speaker, he looks at Bitcoin and says, I'm going to submit, some changes, to the code base. And because he sees it from a technology point of view, he's not thinking like a Wall Street guy, but he's motivated to do what he does because that's who he is. I have my background on Wall Street, so I'm a stockbroker, and my attraction to Bitcoin was always the basic question I asked myself from day one is this a new asset class, right? Because it's not a stock or a bond or a cash. It's kind of like a commodity, but it's not anything like we've seen before. So then if it is a new asset class, then I know from my Wall Street background that every fiduciary in the world would have to ask themselves, should I have exposure to this asset class? Because if they don't, they could be setting themselves up for some trouble in violating their fiduciary responsibility, right? So as a fiduciary myself for many years, I'm familiar with that industry and that market. And so how big is the global market? It's like $400 trillion. Well, what if Bitcoin gets 1% of that market? Well, then it's $1 million, $2 million, $3 million. So I'm risking $1 to make $1 million. Okay. That sounds like a reasonable risk reward profile to me, so that was how I approached it. Not so much on the technology side, although I do have experience architecting digital currency. I have a patent. I have the only patent on a virtual currency, which was granted in 1996. So it's the Virtual Specialist Patent 5950176, if you want to look that up. And so that was sold to Cantor Fitzgerald, who now is buying all the treasuries for Tether. And I met Howard Lutnick just a few weeks ago. So it was like the circle is come all the way around. He bought my virtual currency. And now he's buying, my Bitcoin effectively. So Howard's been working for me now for 20 years. Trading in the shitcoin space is no different than gambling. Okay, so they're gambling, and people love to gamble. And the people who promote those shitcoins know that people love to gamble. There's a place for that called Las Vegas or Macau in China. And I've often said that Coinbase is an unregistered casino operating in California, that they should move to Nevada and get a proper gambling license, because they're not offering financial services. It's a gambling house disguised as something else. And so they're not investing. They're not participating in Bitcoin. They're just gambling. Now, when you say I'm gambling in the shitcoin market so I can buy more Bitcoin, okay, go to Las Vegas and 1,000 people on the floor of the slot machines are all telling you that, I'm going to use my winnings to buy a new extension on my house, like my winnings, my winnings, right? But those 1,000 people are all losing. They lost 1,000, then they made $5. They're like, I'm a winner. I made $5. They're like, you lost $995. They're like, no, I didn't. No, I didn't. Right? They're not well. So you can't gamble your way to making more money. And everybody thinks that they can. But again, that's the opposite of being humble and stacking sats. Right. That's the opposite. It attracts the fiat mentality. It attracts the gambleaholic. And that's what drives the prices of that total shitcoin casino.
Drawing from his background in finance, Keiser delves into the concept of Bitcoin as a new asset class. He elucidates how Bitcoin's unique properties challenge traditional investment paradigms, compelling fiduciaries to reassess their portfolios. Keiser calculates the potential market cap of Bitcoin, envisioning astronomical growth fueled by institutional adoption. He juxtaposes Bitcoin against shitcoins, deriding them as mere gambling instruments devoid of genuine value. Please like and subscribe my channel.